Good afternoon. Welcome to the 2023 Upper Manhattan Q1 Real Estate Report by Harlem Lofts. It's April 27th. We're going to divide this into two segments. We're going to have our Townhouse report and then our condominium report. I'm Rob Pear, the founder of the firm.
Gareth John, head of research.
Okay, let's start with the Townhouse market report. All right, these are the zip codes that we cover. That's Central Park, so everything above. That's the property types that we cover. I'll let you read that and skip through. It's townhouses. So we're going to do a comparison of, I'll let Gareth jump into this. This is a year-over-year comparison. Gareth, go ahead.
Right, so in 2022 to 23, this is year on year, we saw 61 fair market value townhouse sales in Upper Manhattan. That's compared to 111 the previous year. So the average number year on year over the past 10 years is about 90. 2021 to 22 was a rebound year, and 61 is significantly down. It's down by $100 million over, so 2022 to 23 is $100 million less than 21 to 22. That's due to increased interest rates.
100 million in 3.
Yep,
That's right.
So, and you can see that here. So the average is about 90. This is 2019 to 20. 2020 drops, COVID, rebounds 21 to 22, and then back down in 22 to 23. Okay, let's look at how, what does that mean for prices per sale? It actually doesn't mean much. Prices have been stable pretty much for at least the last 5 years. What changes is the number of transactions.
The peak was September of 17, if you're wondering.
Okay, and the property types that we deal with, that's residential 1 and 2 family, 3+ rental investment properties, and SROs. Some as a percentage of sales, blue, the residential properties have stayed about the same. Rental investment have decreased slightly, and SROs have actually increased, although as we'll see that the price per square foot on those has dropped, and actually the overall prices have dropped. Okay, let's look at townhouse prices year on year. 2022 to 23, residential at the highest, 2.94 million, $724 per square foot. Those have gone up about 5% over the previous year. Rental investment in orange, those have gone up about 10%. SROs are renovation investment. They carry a little bit of risk. And in a down market, they tend to suffer, and their prices have dropped approximately 18%, which is, that's substantial. Yeah. Okay, so let's go into, that's where we've been. Let's go to where we are and where we're going. So let's look at townhouse inventory, the percentage of listings that are offering discounts, and the number of in-contract listings. So 1, 2, 3. This is a bit busy. Stay with me. It's okay. So in 2021, we saw lots of sales and inventory dropped. Sellers jumped in, seeing the active market in 2022. Inventory went up, interest rates went up, and the market stagnated. People took their listings off the market at the end of 22. They're starting to come back. Sellers are more cautious, so it's not hitting those heights, and probably.
But 96 isn't that's average. If you go back to 2011, that's an average. Right. I mean, that's a normal mark.
So in the face of competition, sellers now also have seen that, they need to give buyers incentives. So they are discounting their listings, and that's kind of increased 2022 to 2023. Over half of townhouses listed currently are showing discounts versus their initial listing.
Let me add something there. You see this big spike here. All the properties hit the market. The buyers weren't catching on very quickly. So then you saw a really big spike in discounts just within the last 3 weeks.
Right. And then if we go over here on the right, we can see that these incentives are starting to work. The number of in-contract listings has increased from an all-time low at the end of 2022 to it's increasing. It's 11 currently. That's way down from middle of 2021, but it's going in the right direction.
And these discounts are helping.
They are. And so what's driving the recovery? So it's these are 3 charts: listings by price, in contract by price, and sales by price. So these are snapshots. This is an aggregate year on year. This is less than 2 million, 2 to 3, 3 to 4, and over 4 million. And you can see that the number of listings, the number in contract, and the number that are sold, the lower end of the market is driving the recovery under $3 million. So the increased interest rates are inhibiting the upper end of the market more than the lower end.
But we did talk about in our forecast the fact that, go back one slide here, we did talk about the 2 to 3 million mark and how these 3 to 4 and 4 up were going to increase, and this was going to go down, and we had 0 in contract for, is this last?
That's this month. Yeah.
This month. So 0 in contract. So these higher end properties are starting to sell now. It was dominated by the low market.
Right. Okay, so Rolf, what do you think going forward?
Well, you have increased inventory, increased discounts, and increase in contract, right?
Right.
So the market, yes, it didn't jump back like we thought it would in February. It did start earlier. It started in January rather than, say, March or April, with a lot of listings hitting the market. Nothing happened until you saw those discounts start happening. So now that the discounts are going up, the in contracts are going up. So I would say, as we've been saying, if you're a buyer, be prepared to have your money in order, your pre-approvals, and go out and buy the best property out there. And you're probably going to get a discount. But overall, as Gareth said, the pricing has been steady since 2018. So,
all right,
that's it.
So let's move on from townhouses to condos. Thank you very much for your time.
Yeah.
Please visit our website.
Yes, look below at the links, like us, and all that stuff. You down these things when they come out.
Download our market reports. Sign up for our online events. Social media. We have Facebook, LinkedIn, very active YouTube channel.
We do.
Yeah. So that's it. Thank you very much.